Hello and welcome to the day ahead. It is the 16th of May, a Friday. I'm Nadine Blaney. Well, Aussie shares are set to rally at the open by 80 points after European markets reversed losses to end higher, and US indices closed solidly higher as well. That's as the economic data slowed in the US, so increasing the chances for a rate cut in America sooner rather than later. Here's the picture on Wall Street. The Dow was up by 0.6%, the S&P 500 up by 0.4%, and it came as the U.S. president was in the UAE, pledging to strengthen ties with the Gulf state and signing deals totaling over $200 billion US. The two countries also agreed to deepen cooperation in artificial intelligence. Amazon.com shares fell after rival retailer Walmart warned that it will have to start raising prices this month due to the high cost of tariffs. Consumer discretionary was the worst performing sector on the Dow and the S&P. Shares of Cisco Systems rose, though, by close to 5% after it lifted its annual results forecast. It's betting on steady demand from cloud customers for its networking equipment driven by the AI boom. Deere & Co. shares surged after its results beat analysts' estimates, though it warned of softer demand for tractors as farmers opt to rent machines instead of buying. And after surging earlier in the week on index inclusion, Coinbase shares sunk after the New York Times reported that the U.S. SEC is investigating whether its user numbers in past disclosures were accurate. Oil companies including Chevron, Exxon, ConocoPhillips all regained earlier losses. Oil prices fell as a potential U.S.-Iran nuclear deal stoked over supply concerns. We'll be watching the energy sector here today. In economic news in the United States, April retail sales slowed sharply in April as consumers pulled back on spending. There was also payback for consumers front-loading purchases of cars and trucks ahead of tariffs. Wholesale prices for services like airline tickets and hotel rooms also fell last month, pointing to softening in economic growth. U.S. weekly jobless claims were unchanged, with the U.S. labor market stable. Business inventories barely rose in March, and U.S. manufacturing output fell in April on weak auto production. Now, the Federal Reserve kicked off a two-day framework review with Chair Jerome Powell saying the world has changed since 2020 and that frameworks must adapt, saying supply shocks may be more frequent in the future. He said that we may be entering a period of more frequent, potentially more persistent supply shocks, a difficult challenge for the economy and for central banks. On trade, the Asia Economic Pacific Cooperation APEC group warned that regional exports will barely grow this year as the U.S. tariffs take hold, and that comment came as U.S. and Chinese trade representatives met on the sidelines of that gathering. The U.S. 10-year Treasury yield fell sharply, down 7.9 basis points to 4.44% on the disappointing data. Currencies were mixed against the U.S. dollar. The Aussie dipped and is sitting around 64.1 U.S. cents. I mentioned oil. It fell sharply on talks between Iran and the United States, and as the IEA tipped supply to rise faster than expected. Brent fell more than 2% to $65 per barrel. Copper rose 0.6%. Iron ore fell slightly to 102 US per wet metric ton. And gold staged a bit of a comeback, rising 1.8% on the softer dollar and economic slowdown. Just as a side note, JP Morgan is forecasting a rise in copper and aluminium prices in the second half of the year. In New Zealand, we have an RBNZ survey of inflation expectations for the second quarter. All quiet on the economic front here. On the corporate front, Fletcher Building has announced a divisional restructure and executive changes. GPT will be spending $1 billion on an Australian logistics partnership. That does it for the day ahead. I'm Nadine Blaney. We'll see you tomorrow.